Apologies for absence.
Yes, Chairman. Apologies from Councillors Hilary Bruce and
Questions of interest, members. Audit progress report. Over to you, Adam.
Thank you, Chair. Just to let you know, I'm having sound difficulties my end. I'm struggling to hear the committee. So I'm happy to present. Hopefully the sound will resolve by the time we get to questions. But just to let you know, I might struggle to hear them if not. Okay. So I'll be presenting the outturn report and the annual opinion reports for the 21-22 audit plan. As always, if anyone has any questions on the report, I will endeavour to answer them during this meeting. However, for any that I cannot answer myself, I will get back to you at a later stage after the committee. Okay. Starting with the 21-22 outturn paper, this is for members to note and provides an update on the outturn of the 21-22 Sedgemoor audit plan, as well as highlighting any significant risks or issues identified through our work to the attention of the committee. Turning to page 3 of the outturn report, this lists the reviews that have been finalised since our previous update. You'll note that there is one limited assurance audit on record management and one follow-up audit on risk management to bring to the attention of committee. Both of these audits are included as a one-page summary at the end of the report in Appendix C. Turning to report page 4, this highlights any significant risks identified during our work. Since our previous update, we've identified one potential significant corporate risk in our records management audit. This was primarily in relation to the retention and disposal of records. I will provide further details on both the record management audit and the risk management follow-up towards the end of this update. Turning to report page 5, this shows overall plan completeness and a summary of all our feedback throughout the 21-22 audit plans for managers. Report page 6, this reports changes to the plan since our previous update in February. As always, we keep the plan flexible throughout the year to enable us to respond to risks and other areas of priority. Pages 8 to 10 provide you with an overview of the audit plan, the individual audit engagements undertaken throughout the year, together with the assurance rating and breakdown of recommendations by priority. Turning to Appendix C on pages 11 to 12, this provides a one-page summary of the two audits that we have brought to members' attention. The first is records management, where we completed a high-level review, as well as a survey across senior managers to identify their individual assurance on how well records are managed within the organisation. The one-page report highlights key findings from the review, which include limited oversight of compliance, minimal document disposal undertaken on the Council's primary electronic management system, limited training and incomplete areas on the Council's information asset register and data retention schedule. The actions we agreed from the audit are due to be completed by January 2023. And finally, turning to page 12, this summarises our risk management follow-up, which had identified that all high priority actions were either in progress or complete at the point of testing. One action was not started, which was a low priority free action, and it would start following training. Does anyone have any questions? And I hope I can hear them. Thank you.
All we have to do on that is seven. Yeah.
Adam, can you hear us?
I can hear that, but I heard nothing before it, I'm afraid.
So we've noted that item, so now moving on to the next item, agenda item 7, your swap
Okay.
audit, your opinion report.
Thank you. I can hear that. Okay. Okay, turning on to the annual audit opinion. The Chief Internal Auditor is required to provide an annual audit opinion on how our governance, risk and internal control is working within Sedgemoor District Council. The opinion is not a snapshot in time, but a balanced view on how well controls have been operating during 21-22. The front page of the annual opinion report shows the at-a-glance view of the annual opinion. There are 4 opinion categories that we use, as you can see from the dial. Overall, we have given a reasonable assurance for Sedgemoor District Council. The bullet points provide a summary of why we've given that reasonable assurance against the opinion guidance. Please note that this opinion remains unchanged from last year. Turning to page 3 of our report, we highlight how we have reached our opinion with the work we've undertaken, including the type of work undertaken during the year, which covers assurance reviews, advisory work, grant certifications, as well as other means. Page 4 is a snapshot of our audit coverage against strategic risks over the last year. Some of the areas not covered this year have been included in our previous audit plans, such as Northgate, CCTV and commercial investments. Internal audit can't give assurance against all risks the council faces, and audit committee need to identify what are the key risks they want us looking at and what other sources of assurance they may need. Page 5 shows that one significant risk was identified during our year, which was covered in our previous report. This was also the one limited assurance review. As usual, any limited assurance reviews will be followed up to provide this committee with assurance that the actions are progressing. The remaining pages of this report cover some visual representations of our outputs for the year, as well as our performance and summary of all work completed, which was also shown in our outturn report. Does anyone have any questions regarding the annual opinion report? Thank you.
Are there any questions, members? No, there appears to be no questions. So again, on that item, we just. Thank you, Adam. Now
Thank
we
you.
go on to agenda 8, review of internal audit. Adam?
Hopefully everybody can hear me. Okay, this is the annual review that I have to do in terms of the review of internal audit. As you know, SWOP are our internal auditors and have been for many years now, and we have regular reports to this committee. Just had to today. So this is a review just to see what the performance is like and whether we're happy with it and that they meet the performance indicators that we set. If I just draw your attention to section 4.2, which is on page 6 of the report. That table there just shows the performance measures that we use, and I've actually put a comparison in so you can see sort of over the last 4 years what the performance has been like. And as you can see, we've had good performance and we continue to have good performance in 21-22. So I've got no issues to raise as part of the audit. In terms of the audits complete, it's been, over the last few years due to COVID and now due to the impact on resources to do with local government reorganisation, it has been quite difficult to complete the audits, having the resources available for officers to meet with the auditors. But what we've done over the last few years is to have a real flexible approach to the audit plan, which I think is really, really important. It's really helped us. And SWOP have worked really well with us to help support where we've needed them, both when we had the COVID pandemic. We had quite a lot of grant reports that needed assurance checks, but also in this year we've had different areas where we've needed help in terms of local government reorganisation, and we will continue to now. So they've actually been a real support. So I'm happy with the support that we're getting in the performance, although not all of the audit plans have been met for various reasons. Just in terms of section 6, which is our service standards, we've got some service standards that we agreed some time ago, and all of those have been met. And you'll know as being members on this committee that we have reports every meeting in terms of the audits that have been carried out and the progress. And we have the annual audit plan, so all of those targets have been met. We did section 7 and section 8 sort of actions that we've put in place in previous years to look at, and one of those actions that's in there on a regular basis is making sure that we, along with SWAP, do some training for members, which we have tried to do. It's been slower than perhaps we would have liked, but we have managed to do that. And then just in the current year, the action, I've only put the one action in there because clearly we're in completely different times now, unusual times. So it's about ensuring the audit plan resources include preparation for LGR, and as I said, because we've got quite a flexible audit plan, we make sure that happens anyway, but we still make sure that all of the managed audits in terms of financial systems, etc., are in place, because that's really important that we continue to have that. But just in summary, in terms of the performance, SWAP have continued to provide a service that we're happy with and ensures that we're covered in terms of our risks, and also helps us provide the information that we need to in terms of information that Grant Thornton want as our external auditors. So I'm happy to take any questions if anybody's got any.
Thank you, Alison. Are there any questions, members, please? No? So we have suggested members are recommended to note findings from your review. So we're now going to agenda item number 9, overdue swap actions. And I'm pleased to say this is the 3rd time in a row that we've had no overdue swap actions, so that's good news. The system we're using must be working. So that, again, the recommendation there is to note that there are no overdue high-risk swap audit actions. Now moving on to agenda item number 10, audit findings report, and that's over to Julie.
Chair, thank you very much indeed. Good afternoon. Can everybody hear me okay?
Yes.
Perfect, thank you. Sorry, there's a bit of a delay there. So this report that you have in front of you is our audit findings report, which is effectively our mechanism of reporting to you as those charged with governance the findings that are arising from our audit of the financial statements. So just to highlight where we've got to in terms of this part of the audit process, as members of the committee will recall, we brought a briefing paper, a progress paper to a previous committee, highlighting the ongoing progress of the audit, and we highlighted to this committee some ongoing issues that we'd identified in the approach the authority taken in terms of the valuation of its property, plant and equipment. Now, there's been a considerable amount of work that's been happening behind the scenes, both with ourselves and with officers since those issues had initially been identified. And committee members may recall that as a result of those findings, the council commissioned an additional external valuer to conduct some further work arising from the concerns that we'd previously raised at the committee around the basis of the assumptions and also the evidence to support the underpinning assumptions to those valuations. What's happened since then is that the authority has received updated valuations from its external valuers, which has resulted in some quite significant changes to the accounts that we've obviously need to audit and obviously go through that process with a new valuer. I'm really pleased to say that a considerable part of that work has progressed very, very well. So looking at the portfolio of the authority's property, plant and equipment, there's 3 component parts. There's your main land and buildings, which is sort of your main establishment used to run your council services. You also have a portfolio of investment properties, and then obviously you have your council dwellings in terms of your housing stock. I'm pleased to say that the work in relation to the valuation exercise for the main land and buildings and also the investment property, that side of the work has progressed very well. And you'll see from the findings that are contained within the report, we've not identified any significant issues to draw to your attention, other than obviously the adjustments that were required as a result of the revaluation that was done by that second valuation exercise. The only area I really wanted to flag to committee that is one area that remains ongoing at the moment is in relation to the valuation of the council housing stock. And just for committee's benefit, in terms of the way that the valuation works, it's done on what we call a beacon valuation basis. Obviously, the council's got thousands of houses that it can't individually go around and value every single house. They are grouped into groups of houses that follow similar characteristics or nature, and then you apply, you designate what we call a beacon property that is intended to be representative of all of the other houses within that particular group. So what the work we have to look at is we have to test the valuation around the beacon property itself, but then look at the broader group that that beacon sits within to make sure what's within that group as a whole is representative of the whole population, and also that the houses have been grouped into the right property group to start with, so that when you scale the valuation up to what effectively goes into the accounts, that results in a sort of a material appropriate estimate of the valuation of the council housing. Now, what we've been able to establish is that we've gone through the actual exercise of the individual valuations of the individual beacon properties themselves, and we're very comfortable with what the valuers have done in terms of those valuations. So that's really good progress. The area that we've got ongoing work is around the actual grouping and the categorization of the properties into their respective beacon groups. That is data that is managed and derived by the authority, not by the valuer. And in doing some specific work around those other properties within the individual beacons, we've identified, looking at the beacon value that those groups are sitting within, there are in some instances, quite considerable differences between the beacon value and those other assets within that group when we're looking at other comparable market prices for those types of assets and their location. So we're in process of working through with the authority to have another look at that data set to make sure that when you're doing that extrapolation and scale up of the valuation, that those groups are appropriate. And that is the key element of the work that is still ongoing. You'll see from our status report on page 3 of reports, there are some small other matters just to close off, but none of those are significant in terms of progressing the completion of the audit. And lots of those are very much part of the sort of final bit of the completion part of the process. So I just wanted to highlight the current position with the audit. You'll see later into the report that we've highlighted a number of recommendations arising from our work to date, which have been accepted by management. You'll see some adjustments that have already been sort of processed into the accounts that you will see in the appendices where those adjustments have arisen. And as I said, we will continue to progress and work very closely with officers to close off this remaining aspect of the work at the earliest opportunity. We're very conscious of the amount of time that we've already consumed in terms of trying to get to this stage of the audit. I'm very much committed to closing and concluding this work at the earliest opportunity. I'll stop there, Chair, but I'm sure there'll be questions from the committee.
Are there any questions, members?
Thank you. It's probably going to be a straightforward answer, but just clarity. Max, it's a big number. On page 33, it talks about the 5 leases. Know that where the lease was not being applied over the correct lease term, the effect of this is about 151,145. Could you just tell me what that actually means? What that's about? That's a big number. I just want to get on top of it.
Sorry, Councillor, could you just confirm the page number again for me?
Page 33.
Yes, okay, I've got it now. So this is just a disclosure. So this doesn't in any way affect the sort of the reported numbers in terms of your reported performance. This is a standalone disclosure item, and what this is effectively doing is there's a requirement under the accounting code that the authority has to follow when preparing its accounts to prepare a lease analysis note where it has to separate separate out the total value of its leases and what lease commitments it has over less than 1 year, 1 to 5 years, and beyond 5 years. So what we are effectively trying to reflect in this adjustment here is because the lease terms hadn't been calculated correctly, it was just not being calculated over the correct period. So 151,145 seems like a sizable amount, but in the context of our materiality as a whole, which is set out further in this report, it's not a significant matter, but because it's above what we call our trivial level, we're required to report it through to you as those charged with governance once it hits that threshold. So it's not one that causes me concern. It's just the way something has been presented in a note in terms of the categorization in terms of the length of term. But that has been corrected by management in the latest version. I don't know if that helps at all.
Yes, thank you.
Yeah, so just to clarify on that point, it involves our investment property. It actually involves our investment property leases, and it doesn't mean that the lease has been charged wrong to the leaseholder or anything like that, or that any calculations have been done wrong in terms of the lease itself. It's just the disclosure note in the accounts where we've put it in the wrong column.
Are there any more questions, members? No? Well, I have a question to ask. We're not signing off the accounts today. My concern is, when will we be signing the accounts off? You know, are we waiting another 3 months, or is it going to be a couple of weeks, or what?
So very much our intention is to complete this as quickly as we can, and certainly I would like to conclude this work by September. I think, you know, there's an excess, obviously the numbers involved, as you'll see from what we've already put in the report, you know, small adjustments, particularly in the council housing, can make an enormous difference on the valuation. So from the exercise that the external valuer did on the exercise that's just completed, there was an £18 million adjustment just on the council housing. So it just kind of gives you the size of the scale of why it's important, certainly from my perspective, signing a true and fair opinion that we get this right. But absolutely, it's in nobody's interest for us to allow this work to go later than it absolutely needs to, because obviously we need to move on to the 21-22 exercise. And so if we don't get things completed as soon as possible, that will obviously have a knock-on effect, which is no help to anyone. That notwithstanding, it's really important that council officers make sure that they go through the exercise thoroughly that they need to go through in terms of reviewing that council housing data, because whilst we absolutely want to progress as quickly, we can only do so if a good thorough exercise has been done in terms to trying to resolve this issue with these beacon groupings, because a small error in one group, when you scale it up to the number of properties you've got, can make a very big impact. So we absolutely, I've had conversations with Alison, we're absolutely committed to closing this off as quickly as we can. And we've got plans in place now to organise meetings with the various people to try and put a timeline in place now to agree a specific date. But certainly, Alison and I both share the view that we would like to get this concluded in September.
Yes, just to confirm what Julie's saying, really, we have had conversations. I mean, it's very disappointing that we haven't been able to get them signed off today for the reasons in terms of the valuations. We've done a huge amount of work on the valuations, and we've had the external company come in. Both Grant Thornton and Sedgemoor officers have done a huge amount of work on it, but there's still this issue with the beacon properties. And although it's an estimated value and doesn't actually affect the sort of overall bottom line of the accounts, it is a big figure. So we absolutely need to get it right. But I think I'd like assurance from Grant Thornton that they'll treat it as a priority, and we'll treat it as a priority, because we do want to get the accounts signed off in September, because the 2021-22 accounts have been published, and we're getting, well, the audit should be started for those in October, so we really need to close off 2021 so we can concentrate on 21-22. So if we can't get that done by September, then it has a real knock-on effect. So it's really important that we have commitment from Grant Thornton, and we'll commit our officer time to this as well, to get this over the line.
That. So if there's no more questions, we'll now move on to agenda item number 11, Auditor's Annual Report. And that's over again to you, Julie.
Thank you very much, Chair. So just as a bit of an introduction to members on this part of the report. So also we've just talked a lot about the financial statements. There's actually sort of two key responsibilities we have as your external auditors in discharging our responsibilities under the Code of Audit Practice. One around the accounts, and then this other one is around undertaking a review of your value for money arrangements. And so this auditor's annual report is the mechanism that reports to you what work we've undertaken as part of that review and the findings from that review as well. It's probably also important to highlight to members that the arrangements in terms of the approach that we have to follow in conducting our value for money work changed in 2021. So this is effectively the first report under the new requirements under the Code of Audit Practice. So in previous years, so for 1920, it did a much more sort of risk-based review, and then we gave a formal opinion, like we do with the accounts. We gave a formal qualified or unqualified opinion on your value for money arrangements. Under these new arrangements for 2021, that opinion requirement has gone. It's a much broader assessment, whereas it used to be more risk focused. It's a much broader assessment looking at three key areas, looking at your financial sustainability arrangements, your governance arrangements, and your arrangements to improve economy efficiency and effectiveness. Whilst we don't give a formal opinion, what is required under the value for money Code of Audit Practice requirements is that if we identify evidence of any significant weaknesses, we are required to issue what we call key recommendations in response to those. But as you'll see from the executive summary of this report, I'm very pleased to say we've not identified any areas where we have found any significant weaknesses in the Council's arrangements. There's effectively three tiers of recommendation. As I said, key recommendations are the one in the middle, where if you identify a significant weakness, we report those. The more severe one of those would be a statutory recommendation, which actually requires immediate action by the authority within 28 days, needs to be formally considered by council. So that's the sort of the very other end of the spectrum. In your case, you've had the sort of the most minor recommendations, where what we call improvement recommendations have been identified. And that's not unsurprising. Whilst it may seem like a number of recommendations have been set out in this report, they are intended to be there to add value in terms of enhancing or noting areas where there would be scope to improve your existing arrangements, but also recognising where you are in your journey in terms of transitioning to One Somerset. I recognise that how these will be taken forward into the new organisation will obviously be subject to anything as part of that reorganisation. But as it's a backward-looking assessment for the 2021 year, this is how we've effectively assessed your arrangements. So I think the committee can take a lot of assurance in that we are only flagging improvement recommendations in our report. And you'll see on page 3 in that executive summary, we've put in sort of bullet points, sort of the key messages that we've identified that have led to those improvement recommendations. So I appreciate it was quite a lot. There's quite a lot of information to digest it, because it is a very broad assessment under this new approach. But Chair, I won't go through all of the detail of it. I'll take the report as read, but if there are any specific questions from committee on any aspect of it, I'm very happy to take any questions.
Are there any questions, members? So we'll bring this.
Again, it's probably going to be a simple answer, I hope. Just as to how it actually works, on the improvement recommendations, for example, I mean, all of them are relevant to this question, but does the financial sustainability number 3 recommendation, and then at the bottom it says management comment agreed. Is there like a timeline as to when the management put that recommendation into force, sort of thing, or is it just as and when?
I mean, from my perspective, through your Chair, it's down for management to determine an appropriate timescale. I think the important thing for us is they acknowledge the finding, and they accept that that is an area where if given the opportunity, there would be a scope for improvement. But I think the timescales, and Alison may want to come in on this, but the timescales, I guess, for many of these may be, it depends, because it will be dependent on how the authority decides to act upon any of these, given the priority of the preparedness of getting ready for the reorganisation and the transition. So certainly we haven't been specific to request a timescale, recognising where the authority is at. But I don't know if Alison has any additional comment to make at this one.
Thought that in normal circumstances we would have those actions and we would build them into our work plans, and some we would prioritise over others, and also there may be some there that we'd have further discussions with Grant Thornton as to how we can deliver them, because as from the 1st of April next year we'll be all one council. I think it's more about the discussions we have with the other councils that join in together in terms of what things like the cash flow projections will look like, all of those sort of things, because there would be little point in us setting up detailed systems now, and then it changes. So it'll be more about working with the other authorities to make sure that, and I'm sure most of them have got similar recommendations to us on some of these areas, of the 5 authorities.
Hi, I come to page 30, which looks at benchmarking, and you've got a chart there which looks at service costs identified as very high. All these services, homelessness, rent allowances, foreshore, waste collection, building control, retirement benefit, land drainage, and development. Now, my understanding from past is that these are all statutory services which an authority has to provide the needs of the community, and there's no alternative but to provide these services. We'd be, or if we didn't provide them, I'm sure you would agree. I just wondered why you define them as very high. How do you use that subjective term when this is a statutory service where there's no alternative? I'm particularly also concerned about the one about retirement benefits when it's that meant, and I read that it included the provision that you had to make lump sum payments to make up the pension fund deficit. But surely that's not, they should not be done that way, because I understood when the pension fund contributions ceased by local authorities as a part when some years ago, there was an understanding that would be a statutory obligation on the local authorities not to let pension funds go into deficit because of the pension fund contribution, what's the right word, holiday, which seems an awful long holiday, to allow the fund to go into deficit. And why is it being worded in as an ex gratia payment, as it were? It's a lump sum payment, whereas that should be a regular payment to make sure the fund doesn't go into deficit. And I speak as a member, perhaps I should have declared an interest. I was a pensioner who was a member of this pension scheme.
So through you, Chair. So what this diagram is trying to show. So we have a piece of software called CFO Insights, and what this is trying to do in benchmarking is we are able to have access to what we call the RO data. So there's revenue outturn data that all local authorities submit into government at the end of each year, and we were able to what we're able to do is to benchmark your cost in relative terms to others. So the way to read this chart is that the 50 line of the diagram is the median. So all we're trying to highlight here is recognizing that every authority will have these statutory, or very many of these, many authorities nationally will have these statutory services. What we're trying to highlight is if 50 is the median, in Sedgemoor's case, these are the ones where in relative comparative terms to others, you are considerably above the median average in terms of all authorities, in terms of the cost of delivering the service. So absolutely take your point, Councillor, in that this is a statutory service. It's not recognising it's a necessary cost of the statutory service. We recognise that this service will be provided in many authorities. All we're saying is when you compare the cost of delivering this statutory service in your authority compared to other authorities, you are benchmarking on average higher than the median. So median is 50, and in many cases you're up in the sort of 80s. So all we're trying to flag here when we're looking at our value for money assessment is just to ask the questioning authority, do you understand the reasons why you are comparatively higher in running your statutory services compared to other authorities who are running similar services? So there will be some nuances and some very specific matters, which is what we've tried to recognise in the bullet points, because the RO data is only as reliable, that's data that's submitted by the authorities themselves into government. So it's only as reliable as the data that goes in from each authority, and every authority will take slightly different interpretations of the data. But the RO data is the only uniform data that is out there on a national basis that can be used as a basis of comparing one authority to another in terms of expenditure. So we absolutely recognise there's limitations in the data that's been used for this exercise, but so long as we understand, and indeed the authority understands, where those higher cost services are and why, it at least just prompts the question of either you understand there's a reason because either there's been a specific payments or specific interpretation that you've included that maybe some authorities haven't, but also what the benchmarking is intended to try to be helpful in doing is that actually, if you were a local authority that was going through some challenging financial situation where you want to try and identify areas where there was scope to consider running a service differently or trying to deliver and develop some savings plans, if you knew that particular services were quite high cost, it may just be an area that you might want to target some work on to say, is there a way that we can do this better and more efficiently? So I'm not, as you've seen from the narrative that I've tried to share in the third paragraph on that page, we haven't identified any significant areas of risk from that analysis because we have understood your costs in discussions with you. But we just wanted to make sure that you understood that when we've looked at this is the sort of starting position that we've looked at in terms of the raw data to try and at least prompt some discussion about, do you actually understand why that is? So just to give reassurance to the member really that I'm not concerned by the data, because I believe that we've had the conversation with the director, with the finance team, and understood some of the reasons for that. But I think it's just helpful sort of comparative data just to understand where your authority sits compared to some others. I hope that helps, member councillor, but very happy to take any further questions.
Can I come back, please? I'm very impressed with that answer, and obviously it's helped with my understanding. However, I think that I trust that the RO data can also be interpreted alongside such things as homelessness, housing need, and deprivation, of which there is significant amounts in the district. And I would just be worried that somebody would actually pick up this chart and use it politically and say, here's Sedgemoor with very high costs, and use it against the authority and against the elected members on this authority. I represent a town council. So it is really rather clear, because we've got some very essential things here from economic development, which is going to be the post-Hinkley Point development. We've got the situation of land drainage, where we've still got classic, as somebody who's flooded, we've still got what's the right word? Colossal underspending on flood prevention on the levels, which is the Sedgemoor is the biggest part, and we've also got issues about foreshores and foreshores being maintained. So, and I think this ought to be clear, so that the councillors, when they're asked why the auditors are saying these service costs identified, they know exactly why they are and are able to justify them. Thank you.
Following on from that, really, I think this is useful information, but I think it's got to be viewed in a context, because it's quite stark information when you look at it like this. It doesn't give you any data in terms of it doesn't give you any data in terms of the amount of people that we've helped, how big an issue it is in our area. Economic development could have been a year where we had a massive scheme going on, so it's only looking at 1 year's finances. So benchmarking is really important, and it does give you an idea of, as Judy said, the services perhaps to look at if you're trying to reduce costs, but you need to look at the whole context. And this doesn't give you that. So I think that's important. You know, it's important that you raise that, and I think you're absolutely right that it does only give you 1 year cost as well.
Thank you.
Questions? Julie, we just need to note that report. Thank you. Right, move on now to agenda item number 12, statement of accounts 2020 to 2021.
I'm just going to introduce it first of all, and just firstly to say, obviously we're talking about the statement of accounts for 2021 here. We need to keep reminding ourselves because that's what now. Just in terms of the recommendations, clearly, you know, based on what we've already talked about today, we're not going to be able to ask you to authorise the letter of representation or to approve the statement of accounts. We're hoping that we'll be able to come back in September and ask you to do that. So we have got a short presentation, but we won't go into as much detail as we normally would because we will be coming back in September with that detail. So I think we'll go straight over to the presentation now. Should it be on the screen? Yeah. Do I operate it? Okay, so that first slide just gives you a list basically of the, well, not me, I haven't done much work on it, but the rest of the finance team that have done a huge amount of work on the statement of accounts. They've just completed the 21-22 now within the statutory deadline. So just a big thank you really to the staff that have helped with that. Just in terms of the process for closing the accounts, as you already know, they're compiled under the International Financial Reporting Standards. The draft accounts were originally published by the deadline on the 31st of July 2021. So I signed them off as a Section 151 officer and they're published on our website, and that was done by the statutory deadline. The audit started, Grant Thornton are auditors, as you know, and that started 17th of August, my goodness. And some work took place in September, October, but we have since that time, clearly we haven't all been working on them consistently, but we have done quite a lot of work because there has been quite a lot of issues, particularly with the valuations, and you have heard about that already this afternoon, so I won't go into too much detail. We've just got that final hurdle that we need to get over, which is the Beacon Properties, which, as you know, we'll be working on. Thank you. So the accounts, very long document, 149 pages now, goodness. It's broken down into those categories. I won't read that out, but I'm sure you've had a look at the statement of accounts, and it is a big document, but grouped into those statements. And just in terms of the first report, so the narrative report, which is at the beginning, which is actually quite a few pages, it seems to get longer every year. That gives you the story really of, or a summary of Sedgemoor District Council, sort of where we are, our performance through the year. So if you don't want to read any of the detailed stuff in the accounts, but I recommend obviously that you do because you'll be signing them off, but that gives you a really good idea of how we're performing and where we are as an authority. So just in terms of, and just remember we are talking about 2021, so you know, clearly things have moved on in the world since then, but when we put together these accounts, we did report an underspend on the general fund. That was mainly due to over collection of income, which has been the same actually. That's followed through again for this year, but that means that we've got, I think it was about 1.1 million extras put into balances, which is positive because that means that we've got more imbalances to help us with the strategy that we've had for over 10 years now. It is a managed use of balances. So we've had our specific reserve in terms of balances to help us smooth out the savings that we needed to close the funding gap. And as we go into the new council, 1st of April, we'll be taking very healthy balances in to help with, clearly they only, once you've spent them, but they will help with delivering some sort of longer term savings. So we are in a very good financial position. So we did have that underspend in 2021. We also had an underspend on the housing revenue account. A lot of that was to do with the fact that because of the impact on COVID, a lot of the capital projects weren't delivered to the timescale that was originally anticipated. But that will catch up with itself. So a lot of the capital was funded from revenue, so that did have an impact on the housing revenue account. That needs to be viewed in the context of it's a 30-year business plan. So actually, if you have a couple of years where you have an underspend, that will soon catch up with itself. So we had the underspend on the housing revenue account as well. We also had, this is a bit of a pattern, isn't it? We did have an underspend on the capital expenditure, again, both on housing revenue account and the general fund, and that was because schemes weren't delivered necessarily to timescale because we had the impact of COVID, and it seems quite a while ago now, the initial impact of COVID, but it did have quite an impact on resources and delivery because of the huge amount of work that needed to be done in terms of helping businesses, etc., with the impact of COVID. So just in terms of financial challenges, as I said, we had our medium-term financial plan, we had our managed use of balances strategy, we had our savings built in, and we were, predicting a healthy, and we're still predicting a healthy financial situation. We will now be taking that into the new council. Clearly, the figures will have changed since 2021, but we still have significant balances to help us with the financial challenges. And there was, and I won't go into the detail, but there was quite a financial impact with COVID-19, although the government did provide quite a lot of funding in terms of loss of income that we had and additional expenditure. And in terms of business rates and helping businesses out, we had a huge amount of funding that was given out to businesses, but that was funded by the government. So we did get that money in. But that will all show in the account the impact. And then the narrative report also talks about how we performed as a council, and we were still high performing, still are now, and we were high performing in 2021. And then there's a huge amount of information in there in terms of what we achieved as a council. Again, achieved a lot in 2021, and that's continued, still continuing now. So just in terms of the core statements and notes, and the rest of the team will go into a little bit more detail in terms of those. This is just a list here. So the movement in balances, movement in reserves, sorry, we'll give you a statement which shows you how what level of balances we've got. And as I said, they are healthy, and the movement on those, which is, I think, a useful statement. And then we've got the I&E account, the balance sheet, which is where any impact on the Beacon property valuations will be shown, the cash flow statement, and then we've got the notes to the accounts. So I'll hand over to Tanya, I think it is, one of the accountants, to run through the movement and reserve statement.
Hello? Come on. Oh, can you hear me? Hello?
Yes.
Can you hear me?
Yes, we can.
Oh, that's okay. Sorry, it's been really crackly, so I didn't know if you were going to be able to hear me. So, movement in reserve statement. So that's the first primary statement, and what that shows is all of the movement in our reserves, and we have what we call usable reserves and unusable reserves. So our usable reserves are like general fund balance, HRA balance, but there's also a major repairs reserve, which is to do with the HRA, and there's contributions into that from the HRA that then are used to fund capital expenditure. So that account quite often shows us not very much in it, but that's because we have money coming in the year, and then we use it all to fund capital expenditure on the HRA. Capital receipts reserve is just used for funding capital. So if we sell an asset, the money would go into there, and then we would use our capital receipts to pay for capital expenditure. So that capital receipts reserve holds general fund and HRA. Obviously, they're both ring fenced to the general fund and the HRA. And capital grants and applied account. So in 2021, this will be the first time you will have seen this, and this is because of the treatment of the SIL receipts now, because they were treated as a receipt in advance on the balance sheet, and now they have to be treated as a capital grants and applied account. So it's just moved from one line on the balance sheet to another, which Alison Monteith will explain when she gets to the balance sheet. So then that comes to your total usable reserves. So the bottom line is that we've got 52 million and 53 million pounds worth of unusable reserves. The bulk of it being the general fund and the HRA. With the general fund, that includes our specific reserve and our general reserve. So our specific reserves are detailed further on in the statement of accounts, and the general reserve is a risk assessed balance of 1.5 million, which we risk assess in the MTFP each year, and it's been at 1.5 million. I'm not sure for how long. It used to be 1.7, but now it's 1.5 because we risk assess it. So then your unusable reserves, or your reserves where like your capital adjustment account and things like that, where the way that local government has to do accounts is we reverse a lot of entries out. We have called statutory overrides to reverse them out, so they go through and they sit on the balance sheet in the unusable reserves. So the next statement in the accounts is the comprehensive income and expenditure statement. So this is sort of the day-to-day in-year running of the accounts. I've just spotted an error. It says 2019-20. It should say 2020-21. Do apologise for that. I pinched that from another presentation and changed the numbers, so I do apologise. So the top half, the cost of services, is the net cost of services, and that is the net expenditure. So, like for instance, on the general fund, that would be all your expenditure, and the gross income would be all your grant income. The bulk of that would be housing benefits and all your fees and charges. Then the next section of the I&E is in other operating expenditure is your is the parish precepts and some oh, go back. And then you've got your finance and investment income and expenditure, and then your taxation non-specific grant income. That's all where all your the income comes in for your council tax and business rates and etc. So that obviously makes to the we've had a net surplus on the I&E at the end of 2020-21. The bottom bit is accounting entries, so on revaluations and on the actuarial gain or loss on the pensions. So the next, I think Alison Monteith is now going to do the balance sheet, which is the next slide.
Change the battery. So the balance sheet's a snapshot at the year end where the council are, so it's just at one point in time. Shows all the assets and liabilities that Paul still, and then the usable and unusable reserves that Tanya's talked about. This year we've had to do a third balance sheet for a prior period adjustment for the treatment of SIL receipts. So one of the things that the auditors picked up, and we also spotted it ourselves as well, and so agreed quite early on with the auditors that the way we treated the SIL receipts was not quite right. So when we get receipts in from developers for community infrastructure levy, we've been putting them in a receipts in advance pot, whereas actually they don't really get repaid to developers. They just kept, and they're kind of usable straight away, rather than having to be potentially repaid back. So it's not a receipt in advance, it's a receipt that should go straight into your accounts and onto your balance sheet. So it has no effect on how much money we've got or anything like that. It's just an accounting entry that's been incorrect ever since we implemented SIL. So that's required a prior period adjustment. That balance sheet's quite small there, but you might be able to see it better on the bigger screen. So at the top of the balance sheet obviously are your long-term assets and your current assets. So pretty standard: property, plant and equipment, heritage, intangible assets, long-term investments, long-term debtors, and then basically the short-term elements of all of those things. Property, plant and equipment is made up of the council dwellings, and then also our operational buildings as well. So when we review our beacon properties, it's that property, plant and equipment line, which is by far the biggest line on the balance sheet, that will change either upwards or downwards. I have no idea. Next slide, Steve, are the liabilities on balance sheet. So you've got current liabilities and long-term liabilities. Current liabilities are any provisions you've put in for things that that you know are likely to happen. Short-term borrowing, we have been borrowing from other local authorities more recently, so that we keep our borrowing very short because interest rates are so low short-term, rather than going out to the PWLB and fixing out with longer-term borrowings, which was a bit more expensive. And then short-term creditors, which is obviously things that we owe that will be paid out within that year. Longer-term liabilities, long-term borrowing, so that is our fixed borrowing out with generally the PWLB. And our other long-term liabilities of 92 million obviously is the pension fund deficit. So the total net assets are 103 million pounds. So that 103 million pounds, obviously you've got to have two sides to a balance sheet, or top and the bottom is how we present them nowadays. So that's made up of usable reserves and unusable reserves. So those should match to the figures that Tanya presented you on the movement in reserve statement just now. So your usable reserves are your general fund balances, your HRA balances, and the things that Tanya took you through. And the unusable reserves are things that aren't really real, they're just accounting entry reversals that we have to do. So when we change those beacon property values, next time when we bring it to you, that property, plant and equipment figure, as I said, will change at the top, because that valuation will go up or downwards. And the unusable reserves figure at the bottom will change. So it has no effect on our real usable reserves, it's simply someone's judgment on the value of assets. So you'll see those two changes at the very least. Now it depends whether the values go up or whether they go down as to where they'll appear in the rest of the accounts, because sometimes they will go through the CIES, but they don't have an effect on the actual bottom line of the accounts at all. It's just a valuation. So in the unusable reserves, you will see a change either in the capital adjustment account or the revaluation reserve, depending on whether they go up or down. So then we've also got supplementary statements. So we've got the housing revenue account, which is obviously a ring-fenced account that holds all of our council rents and our spend on rents. Collection fund accounting, which Tanya is the whiz on, but we're not going to go through any of that today. And then group accounts, which are the accounts that bring together Sedgemoor District Council, Homes in Sedgemoor, Sedgemoor Group, and Aspen Housing and Development Limited. So that's just our consolidated account and accounts for companies. So just very quickly then on the HRA, I just popped this in at the end. The HRA is continuing to show a surplus in the accounts, but it does look a little strange because actually we're moving money out of balances to use them during the year. So if you do spot that, that's because every year we move money out of balances to pay for keeping our housing stock up to decent home standards. So there's not enough money in the major repairs reserve that Tanya was talking about. It tends to go down to zero every year. The rest of it's made up by using revenue. And of course that revenue is taken from, housing rents from the tenants themselves, ring-fenced accounts. So those rents are recycled back into bringing the stock up to standard or keeping the stock up to standard. So if you've got any questions on any of those, we'll be happy to answer them. We haven't forgotten because it was so long ago we did.
Are there any questions, members?
Thank you. Just for clarity, really, it was mentioned about the statement, the general statement of the accounts at the beginning, and about the underspends, about those eventually going on to unitary. So how does it work? Do you have to wait until the 21-22 to actually know what of that underspend is going, or is the underspend for 2021 what's going to unitary?
So what will happen is that so the 2021 underspend will go into balances. Some of it's gone into specific, some of it into general fund balances, and that's used for 21-22. Then when we get to the end of, so 31st of March 23, we will then, all of our finances will be put together. So at the moment, we're putting together a budget for the new council. So that will, the budget for the new council will take into account all of the balances that we're estimating. I mean, the actual balance will be when we've closed 2022, 23, but we'll have estimates of what the balances are likely to be going into the new authority. Yeah, so each authority will have to close their own accounts for 22, 23, but then that final balance will go to the new council.
So if this one's 2021, what about 21-22 then? Sorry, I'm confused.
So this is 2021. So we've got the underspend of, and unless well, I don't think the auditors will say that's wrong because that it's just but because the issue we've got is the valuation issue. There's no issue with the actual balances, valuation issue. So we've used those balances to set the 2021-22 budget. We've now closed 21-22, but that hasn't been audited yet. So we've got what the estimated balances are. So we move them forward, but it's not until we've finally closed and the auditors have signed off the accounts that that actual balance is the real balance. So we won't know what the 31st of March 2023 balance is to take to the new authority until we've finally been audited, which I hope will be by September. No later.
And you envisaged any potential delay to the 21-22 one, as there has been in 2021?
I'm really hoping there isn't, because the issue that we had was valuations, and we've done a huge amount of work on valuations to get to the 2021 position. And we've used external valuers. They've also done a lot of work on the 2021-22. So the issue was about, the big issues were about valuations, and we've dealt with a lot of those. So for 21-22, hopefully that we've resolved some of those, unless any issues come out of the woodwork that we weren't anticipating. So I'm hoping there won't be.
Okay then, members, are there any more questions? So basically, we've just got to note the progress so far, because we can't or do anything. So anyway, well, thank you for that. We'll now move on to agenda item number 13, anti-racism statement. I can't never say that word. I fudged it, I'm sorry.
Okay, thank you. Thank you, members. Good afternoon. Members may recall that we started this report back in March when we came to audit standards, part of the general qualities update, and there was a concern as to whether the committee could sign off the statement. I think we've resolved that now. So before you today is the anti-racism statement. It is a joint statement for all the councils currently across Somerset, and each of the councils individually are taking it through. The history behind it really is obviously Black Lives Matter and a number of other things have highlighted obviously a number of areas of discrimination that the communities face, and we were, well, as Chief Exec for Somerset County Council was challenged as to why we hadn't actually made a clear statement when the NHS clearly had through the CCG and things like that. So Somerset Quality Officer groups were challenged to come up with this statement, and we've looked at what the health service had agreed and signed off, and we've tried to replicate that in the best means that we can. Done a reasonably, probably aligned it reasonably well. The intention is to that this will form part of the new equality policy as we move forward into the new council, and from that we will actually develop an action plan as well. That process will probably start in September, October time to develop that. But overall, I'm happy to take any questions.
Are there any questions, members?
It was only, so it says to seek endorsement. Does this then go to full council, or does it go to like a different scrutiny committee or something?
No, this is for this committee to actually functions committee is to take responsibility for the council's equality duties. So we endorse it, approve it, that's approved.
That there's typing error because 5.1, the only option is to not endorse the statement. Is that
It's not an option for you. You don't have to endorse it if you as a committee don't see the general, unless I've done the report wrongly.
Oh, usually isn't there usually two?
Yeah,
one
right.
that says adopted, one that says don't.
Apologies, then
But
that's how you write the
maybe
report
that-
at 11 o'clock when Steve's expecting it at 12.
And I was reading it last night at midnight thinking,
Are there any more questions? No? So, its recommendations is to endorse the anti-racism statement. So, all those in favour can. I said the word right then. All right, now we're moving on to agenda item number 14, the risk management update.
Thank you very much. So this is the sort of general overview that I provide to you of the risk for Sedgemoor District Council. I last reported the dashboard, I think, in January 22. So there's changes since then. So I'll take you through those. So as a strategic risk level, as at July 22, we have 22 risks. I think similarly with operational risks, again, which is just one, and again, that's an increase of about 21. Now, for both of those, we've undertaken some significant sort of like updates through services, some training around risk as well. So we've identified a number of you have the customer access project. Unfortunately, the register didn't come to me. Hinkley Programme Board one, I last reported to you back in January. I think we had about 9. We have done a complete revamp of the Hinkley Programme. That's really due to the changes that have been seen in the changes that have come through. So we've done a review of the impacts of those changes, and as a consequence, what the risks are for those impacts. So we know all. And fraud, as you see, we've got 13 risks on the fraud risk register. And finally, the unitary risk register we have of 9. That is a separate one specific to Sedgemoor District Council, in which we identified the risks of unitary or LGR, sorry, I should probably. What we will be doing during the course of August is probably combining the unitary register and our strategic register. So as we go forward into the autumn, we'll have a combined register, and there's a piece of work to identify what the overall, that's the current risk position. There are obviously so happy to take any questions.
Are there any questions, members? Okay, so what we have to do is note the dashboard of risks, to note the council strategic risk, and to identify any further risks that members would like to include for further consideration. And 4 is to note the approach being taken to monitoring of risks. Okay, Simon, for that.
Thank you very much.
We now move on to agenda item number 15, and that is councillors' allowances.
Yes, Chairman. So this is just allowances paid to councillors for the financial year 2021-22, not to be confused with the ones with the statement of accounts. And they're just a matter of fact that has to be reported under the Constitution to the first Audit and Standards Committee of the year.
Final one is number 16, the councillors' attendance.
Again, members, this is detailing councillors' attendance to formal council meetings during the 2021-22 municipal year. So that starts in May when we have our annual council. And it does only include the formal meetings of the council and makes no reference to the amount of time or effort that or other meetings that councillors attend to during their other functions.
Are there any? Councillor Rodriguez?
Sorry, just me being really simple perhaps. On the attendance bit, I couldn't initially make out which one was the percentage because there's two figures there. So can you just clarify just?
Yes, so on the so if we look at the top one, Councillor Barber, I'm going on the column. The first one is number of meetings attended, so that'd be 3, and the previous year was 10. Total possible number of attendance was 12, previously 20, and on the right, the far column should be a percentage symbol. So at those meetings where she sits.
I don't know if anyone can. When, as I do, sit on development, get paid special allowances. If people do not attend on a regular basis those meetings, is there a cut-off time, Chairman, when they're removed from that committee, seeing that we're paid an additional allowance?
There is no fixed attendance. The only thing or attendance that does count is members attending at least one meeting during a 6-month period to remain a district councillor. There's other up to either peer pressure or group leaders to try and make sure that their members are attending if they can attend. With the development committee, I know the chairman is usually quite active if people aren't attending. Got a basic meeting.
Right, thank you, Chairman. That's fine. Thank you.
Councillor Methley?
Thanks. It says here in the executive summary, the table below sets out the committee each councillor serves together with attendance at those meetings. So is this just committee attendance
It's just committee attendance.
and not full council?
Full council, we have the full council as well. So it's formal meetings. Council and those committee meetings where they sit. Or working groups.
Thank you, Chair. Only because I just noticed an error on my one actually, because it's got community scrutiny but hasn't got audit standards on there. And also another question: what about the LGR Joint Scrutiny Committee, which we have Sedgemoor District Council reps on? Is that included in this?
No, because it's not the of this. You on audit standards last year? I'll just blame my previous incumbent, Mr. Melchiorish, who apologise for that. We would have looked at your attendance at all the meetings. Attendance was recorded for each meeting on a spreadsheet, so we. But as I said, it only shows a picture of what members have done for the formal meetings. It makes no reference to the time, effort that they spent dealing with their normal.
And the math is wrong in a few places. You know, Councillor Graham Granter attended 11 of 21, but somehow only has 25. You know, if this is a record, maybe.
I apologise for the errors. I'll get them. I'll see if I can amend them. It generally seems to be a fairly contentious one. It's probably only the councillors that tend to look at it, I'm afraid.
Are there any more questions? No. Let's now 10 to 4, I'm near enough.
Well, that's okay.